Good day, everyone. Welcome to Module 9 of the analysis of the Nigerian Tax Bill 2024. In Module 9, we will cover Chapter 9, General Provisions. Chapter 9 is for general provisions under the tax bill. So, Chapter 9 of the Nigerian Tax Bill 2024 provides the administrative, regulatory, and procedural framework essential for implementing and enforcing the Act. This chapter addresses critical areas such as business restructuring, related party transactions, artificial transactions, and the interpretation of key terms, ensuring clarity and consistency in the application of tax laws. It also empowers tax authorities to handle complex transactions, provide safeguards against tax avoidance, and reinforces the supremacy of this act over existing laws to prevent legal ambiguities. Now, let's look at key provisions, business restructuring, section 191. This section outlines the tax treatment of business restructuring events such as mergers, acquisitions, and asset transfers. So let's look at a key scenario, mergers of businesses. The merging entities are treated as if no new business has commenced. Tax attributes such as unutilized losses and capital allowances are transferred to the surviving entity. So that is with respect to um, merger of business. We also have sale or transfer of business. Now, if a business is sold or transferred, the transaction is treated as a cessation of business for the seller. Unutilized allowances or losses of the seller do not transfer to the buyer. Asset sale without business cessation. If assets are sold without cessation or without ceasing operations, the buyer may claim capital allowances on qualifying capital expenditure. Now, under notification requirement, businesses undergoing restructuring must notify the relevant tax authority before implementation to ensure compliance and proper application of tax rules. The purpose of this is to provide clarity on tax implications of restructuring and ensure fair treatment for all parties involved. Now, that is with respect to business restructuring. Number two, artificial transaction, section 192. Tax authorities can disregard or recharacterize such transactions to align them with their actual economic purpose. Now, significant guidance applies to intragroup dividends. So this prevents tax-free dividend within related entities. Intragroup loans ensure loans between related entities are not used to artificially reduce taxable income. The impact of this is that the provision strengthens the government's ability to counter tax avoidance schemes and uphold the integrity of the tax system. So this specific guidance applies to intragroup dividends, intragroup loans, and other intragroup services. Related party transactions, section 193. Transactions between related parties must adhere to the arm's length principle, ensuring terms are consistent with those applied between unrelated parties. Tax authorities are empowered to adjust prices or terms if transactions deviate from transfer pricing rules. For example, a parent company selling goods to its subsidiary at artificially low prices can have the transaction adjusted to reflect fair market value. Now, the significance of this is that it promotes fairness and prevents base erosion through mispriced related party dealings. Now, the significance of this is to promote fairness and prevent base erosion through mispriced related party dealing. That is with respect to related party transaction section 193. Now for number 4, waiver or refund of liability, that's section 194. If liabilities or expenses previously deducted for tax purposes are waived, refunded, or released, the amounts are treated as taxable income or chargeable gains at the time of adjustment. The purpose of this is to ensure businesses do not benefit from double deductions by treating refunded liabilities as taxable when they are no longer a valid expense. Number 5, authority to make regulations, section 196. Tax authorities with ministerial approval can issue regulations and guidelines to clarify and support the implementation of the act of the bill. Well, as at now, it's still a bill. Now, the significance of this is that this provision allows flexibility to adapt the tax framework to evolving economic and administrative needs without requiring frequent legislative amendment. So number 6, repeals and consequential amendment. That's section 197 to 199. The repealed laws: the Capital Gains Act, the Capital Gain Tax Act, Personal Income Tax Act, and Value Added Tax Act, among others, are repealed. For amended laws, the Petroleum Industry Act and Nigeria Export Processing Zone Act are amended to align with the provision of the Nigerian Tax Bill 2024. The impact of this is to streamline the legal framework by consolidating tax-related provisions under one act and ensuring consistency across related laws. Number 7, supremacy clause. Number 7, supremacy clause. Now, this act takes precedence over any other laws relating to taxes, duties, royalties, or levies in case of inconsistency. And the purpose of this is to eliminate conflicts between overlapping tax laws, providing clarity and certainty for taxpayers and authorities. Now, number 8, interpretation of key terms. Now, this interpretation of key terms provide precise definitions of critical terms such as taxable persons. Now, taxable persons includes individuals, companies, partnerships, and other entities subject to tax under the Act. Residents, this defines residency criteria for individuals and entities crucial for determining tax obligations. Multinational enterprise, this definition clarifies the scope of transfer pricing and related party transaction rules. Priority products identify products eligible for economic development incentives. Now, the significance of all this definition is that clear definitions reduce ambiguity, ensuring consistent application of tax rules across different scenarios. So that is with respect to number 8, interpretation of key terms under section 203. So let's look at the key takeaways now. One is strengthening anti-avoidance measures. Strengthened anti-avoidance measures. So the provisions on artificial transactions and related party dealings empower tax authorities to counter tax avoidance and ensure fairness in tax administration. So looking at number 2 of the key takeaway here is simplified and streamlined tax framework. The repeal of outdated laws consolidates Nigerian tax framework, making it more efficient and easier to navigate for businesses and individuals. Number 3, regulatory and administrative flexibility. Tax authority, the authority to issue regulations ensures the tax framework remains adaptable to new challenges and economic realities. So let me take that again. Regulatory and administrative flexibility. The authority to issue regulations ensures the tax framework remains adaptable to new challenges and economic realities. Clarity and consistency. The supremacy clause and clear definitions provide legal certainty, reducing disputes and fostering compliance. Number 5, equitable treatment of restructuring events. The provisions on business restructuring ensures that mergers, acquisition, and asset transfers are treated fairly, preventing unintended tax advantages or disadvantages. So, conclusion now. Chapter 9 of chapter 9 chapter 9 of the Nigerian Tax Bill 2024 serves as the administrative backbone of the act, ensuring consistency, clarity, and fairness in its application. So, by addressing procedural and regulatory aspects, it provides a solid foundation for implementing the comprehensive reforms outlined in the bill. So, the key strengths are comprehensive guidance on complex transactions like merger and related party dealings, robust anti-avoidance provisions to protect Nigerian tax base, alignment of existing laws with the new tax framework. The call to action for stakeholders under this chapter is that, for one, businesses must understand the tax implications of restructuring and related party transactions to ensure compliance. For tax professionals, you must familiarize yourself with the repeals, amendments, and new regulatory powers to provide accurate advice. For tax authorities need to leverage the regulatory powers and anti-avoidance provisions to enhance compliance and enforce fairness. So, Chapter 9 reinforces Nigeria's commitment to a transparent, fair, and efficient tax system, ensuring that the Nigerian Tax Bill 2024 achieves its goals of modernizing and unifying the country's tax framework. Thank you for your attention. See you at the next module. Thank you.